Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Don Roose of U.S. Commodities. We had a down day on Monday and everything but the cattle market. And Don, I want to start off talking about soybeans first of all. We continue to see that market slide, new lows for the move, and we've had a lot of bearish news, including Chinese fatigue, right?
Yeah, most definitely. I think that's what it's really about. I think that, we're on a dollar break and, we rallied sharply, started with meal, and it was basically on the China deal, not going to get a deal. Then we finally get a deal. But I think what we found during that time frame, we had a lot of fun buying came into the market, pushed us up on all this optimism. And then when we see the real demand out of China, it's kind of a slow walk. And so consequently, we continue to break.
Yeah. How much do you think China has bought so far as U.S. beans?
We think that they bought probably about 260 million. If you count the unknown. So, they're moving along pretty fast. But even that amount, the 441 million, Michelle, remember, that's about half of what they had, just over half of what they bought last year. So while we're talking this is a big positive, it really is a negative when you look at the South America crop coming at us. So hopefully we get enough buying out of these other countries in Asia that make up for it.
But even then, Don, it looks like exports for soybeans are still well behind where we were a year ago, aren't they?
Oh, most definitely. And I know we're supposed to, the other Asia countries are supposed to make up for the China loss and this and that. But, actually we're over 400 million bushels behind last year on our sales. So I think when you look at it going forward, we're going into the harvest for Brazil here very soon. Let's just say we're a month out. And then after that, we get in their gutslot harvest in that April or March timeframe. So we're going to have to make up a lot of ground, and it's going to have to be in the summer months, Michelle. So is that possible? That's the big question mark. And it looks very suspect. But the government in their supply demand report is still telling you that it's possible because they really aren't changing their exports.
The other demand component that we're watching in soybeans is domestic demand. NOPA crushed today under expectations. EPA says they're going to kick the can down the road here a little bit farther on the RFS. So did those two things contribute to the negativity as well?
Well, most definitely, because really, if you look back on it, it wasn't really the soybeans that pushed us to the upside. It was basically the soybean meal, and it was on the big crush numbers. So I think it was that, and then hopes with this biofuel programs going forward are going to be stronger. Well, all those have kind of stalled out, and the soybean meal was the first one that really broke to the downside. So I think if you're watching something, there's also a gap down there on the soybean meal that's getting close to getting filled. But I think watch the soybean meal, see if it can come out of here first, and then soybeans follow, Michelle.
You mentioned funds, and of course they are, even though we have a delayed commitment to traders report, they got longer than we anticipated. And so are they about done liquidating? And from a technical standpoint, do you think we're about done going down?
Well, you're right. When you look at the commitments of traders, they almost got up to their record. 260 million is their all-time record high. They got up to like 230,000 contracts. 260,000 is the old record. So when you look at it, I think that the funds have kind of balanced back here, really. And I think that when you get into this oversold condition where you're at right now, you got to be a little careful because you're kind of kicking the dog down here, if you will. And if anything changes, you could have weather changes. You could have, other countries step in and buy some beans. Lack of farmer selling could stall us out here. So you don't know. You just have to be careful. So is there a lot more downside? I think if you look at November beans next year, if we get more acres, like we're saying, 4 to 5 million more, South America doesn't get any problems. We don't have any problems. It looks like November beans a little bit too high.
Gotcha. But chart gap areas from October 24th, we filled those in some of these contracts of soybeans, but not in others. So does the market go back and fill those or what?
We broke out of a head and shoulders target on beans, which was, we hit that, we stabilized, and then now we pushed down to trying to hit some of these chart gap targets, Michelle. We got very close to those. So we'll see if we fill those here soon, and then we see if we stabilize.
So the corn market down here today, despite the fact that we've had very strong exports and we got another flash sale this morning. So is that market just following wheat or what?
Well, I think you're right. We had a positive report, last week by the government, their monthly report. They took exports up 125 million. I think you got to be careful. That one may be a little bit too strong. I think that's part of the issue. The trade says, well, that's a big number. We'll see if we can make that or not. Not that confident in the government numbers on the soybean exports, so maybe the corn's the same. But yeah, the bottom line is, Michelle, this wheat market, just too much wheat in the world market. That showed up in the government report last week. So that's a big anchor on the corn market. We're seeing more wheat going into the feed. That's an anchor on the corn. Argentina, Australia, both of those crops look like they could be records coming out of the field. So, we need something positive on that end of it, probably in the world market, not right here, but we still have a 508.5 key reversal downside, which means that we should try and hold in here. We're just basing.
So the corn market, from a technical standpoint, has been in a pretty narrow range. In the top end of that range, we just kind of keep seeing these moving averages kind of clustering together here. It's going to be pretty hard to get above that now, isn't it?
Well, if you look at it from a chart standpoint, we talked about a head and shoulders top on the soybean market. We also have an inverted head and shoulders bottom on the corn market. If we would, we're just forming, we haven't been going anyplace because we're forming this right shoulder. So if we can push up, and of course you need a catalyst, try and get over this 452 on March, we might have a little more momentum to the upside. What would do that? The more logical thing is, much like last year, we get into the January report and this yield comes down more than you think on corn, and that gives us a chance to go up. The farmer really doesn't want to sell corn at these price levels, Michelle. It's hard to believe. Most areas it's not even profitable, even with big yields. So input cost too high. So we need some help to the upside. Basis levels trying to do it, but we need some kind of a catalyst, I think, Michelle.
And as we mentioned, the wheat market has been pressured here by the big global supplies, new lows for the move again today. How much lower do you think that market has to go?
Well, if you look at the government, they say $5 is a average cash price for this next year. I guess I'd have to agree with them. I doubt if there's no real reason for the wheat market to be much under $5. So let's just call it 5 to 5.25 probably is a good support, and that's why week after week, Michelle, we really don't go anywhere. We're just kind of stuck in this range. We take off to the upside and we stall and we come back down. I think the funds are short. They're getting less short. I think, respectful that anything can happen from here forward. Black Sea war can heat up. You can get some weather problems, as we round the clock into next spring. We're just kind of at value when you look at it. I think that's the real issue on the wheat. We're at value. Corn, you're probably not that far off the value following wheat. So, but we still need that catalyst to the upside.
And the cattle market back higher. We did have a higher weekly close last week. We're getting close to these 62% retracement levels. Can we get over them with some help from cash or not?
Well, I think you have to ask yourself, what do you think? Where do you think the cattle cycle is? Do you think that we put in the big top and that we're gonna 2 steps down, 1 up, and we're gonna, much like 2014, 15, where we just continued to break into 15, 30% off the top? I think that's the question mark. Or do you think that we're have enough strong demand underneath the market domestically that we're going to hold this area? I think you have to be pretty careful, Michelle. You're at some targets. I think there's going to be a big battleground here on the demand side more than anything else. The Packers back losing about $130 a head because you can't move the beef during this time frame where the beef is supposed to be moving strong. And certainly the consumer, the administration's made it well aware that beef is a high-priced commodity, although a lot of us don't believe necessarily the consumer should vote. But I think that's on their mind. So the bottom line is 62% retracements, about a buck up from here. There's a gap target, another buck up from there. So you would say, let's say $1 to $2 up from here. Let's see what happens. It's up to the cash. Weather certainly has given us a lot of help here. Getting to this level, I think, took weight off and such. So let's see if the weather straightens out. And there's also that lurking when does the Mexican border partially open in stages? So you have that. And then could Brazil beef come in more aggressive? We know Argentina beef's coming in more aggressive. So there's a lot of warning signs, much like we had before. So I think you have to be a little careful here, Michelle.
Cash cattle trade was sharply higher last week. Can we continue to advance this week, do you think?
Well, I think it's probably more of a steady market. I think when you look at it, box beef is stalled. I think the other thing is the Packers losing money now, $130, $140 a head. So that's a warning sign. So it's possible to move up here. We know numbers are going to be tight going forward in the first quarter, Michelle. There's no doubt about it. But, you also have to sell it. So it's going to be up to the demand. I would watch the box beef very close, see what these clearances are each week. And I think that'll give us a bigger direction as we've retraced some of these retracements you were looking for.
And what about the hog market? We did see a little setback. Was that just some profit taking, you think?
Yeah, I think, the bottom line on the hogs, they had the big break similar to cattle. Then they stabilized and moved up and off the low. February had a low of like a $77 range, then moved up a little bit too quick, too fast. Started to get ahead of itself on the with what the cash market is doing. We all know the fourth quarter is always a tough time. So I think we just a little bit of a correction. The charts look okay. The fundamentals look okay. The government next year for hogs has $89 for overall cash value, although they have $235 for cattle. So, the government's not looking for this thing to really fall apart a lot either, Michelle.
Okay. You don't think this had anything to do with the anti-dumping case being announced from Mexico, though?
Well, I think that's a good point. I think they're our biggest customer, but the market was down hard. Maybe it was some of that, Michelle, but it bounced back a little bit. So I think it's a stabilizing market.
All right. Thanks so much, Don Roose with U.S. Commodities. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.